The gorilla. All right, it's Thursday. It is September the 7th, and it is 8:30 a.m. EST. And this is the free to the public Algo Factory Live Lab. So this is where we just kind of answer basic questions. This is for beginners. And of course, in the absence of any beginner questions, I probably would just go through some charts and take a look at the markets. But this is a chance for those of you who are listening to hop onto YouTube, do the like and subscribe thing, like, subscribe, follow, all that typical stuff. However, you do have an opportunity to ask questions about Algo Factory, about what we do. You can ask questions about the market. Perhaps there is a chart that you want to see. Nothing that we say here is investment advice, mind you. So, do bear that in mind. If you're going to invest your money in any of the markets, you need to talk to your licensed investment advisor before taking any risks like that, because you can lose your money. So it's risky. Risk is inherent. However, this is a great opportunity to ask some questions. So let me go ahead and spread this link around. Give me 1 second. I'm going to throw this link up on the Rogue News channel. That way anybody who's in there can see it. Live. Okay. And let me take a look, see if anybody is up and at 'em. I didn't even know up and atom was like up and atom, like AT''EM. I thought it was up and atom as in Adam and Eve. So that was something I learned recently. I was reading and I saw it written. So it's you learn something new every day. Or as I think it's Jason's his name from Amagansett Press will tell you, you learn something old every day because it's only new to you. All right, so. We got Brad King. What's up, Brad? Good to have you in. Morning to you. So, the Gorilla's going to be out. Gorilla is not feeling well. I talked to him this morning. Talked to him pretty much every day. And he just has a pretty bad cold. He thinks it's seasonal cold. I said, did you get the coof? And he says, maybe, but he seems to think it's just a bad cold. And so he's going to, take some time off. He's got some family events coming up, and he wants to make sure that he's healthy. So, I put the announcement over at Rogue, but no shows at all for him for 2 days, not till Monday. That's the plan right now. So that's that. And at this point, I don't have the capability to host yet for for myself on Rogue or for Velas. Otherwise, I would do that. I would just host and let Velas do his thing. But that's not happening right now. So anyway, I'm going to throw the QR code up so you all can just see the address if you want to go over to Algo Factory and just take a look at it. You can zap the QR code on the screen, go to www.algofactory.tech if you want to see more about what we do. But for now, we're going to go ahead and jump into the markets. It looks like the unemployment data just came out, and it is having an effect on the markets. So let me go ahead and go to the screen share. Let's go take a look at that. And if you are in the audience right now, which is actually a pretty small audience for today, we're a small channel. We have not advertised or anything. We haven't pushed out, so we don't really get a lot of people watching these live shows. So, we're not, when I say the audience, talk about a small room full of people. But let me see here. Even so, let's see. Okay, I'm zooming in, making everything visible. Gold against the dollar. Looks like the dollar got strong. Looks like the unemployment number was going to be higher, higher than expected. But I can tell you right now. So we're over right now at forexfactory.com on the calendar. Okay, so that is a great resource for data, right? And you can see unemployment claims here in the red. That's a red envelope. That means this is a high impact event. This means that when this economic data comes out, and this is related to the dollar, it's going to have a high impact on things. And this happens, sometimes it happens once or twice a week. Sometimes it happens nearly every day. Depends on the week. There's a schedule thing. So I'm going to roll over to the chat though. I'm going to put this link in the chat so people can go over to forex.com. Or if you're using TradingView, which is what we use to trade, it's an application that we use to trade. So you can get the data on there as well, and it actually throws this economic data on the chart. It's really a nice thing to do. I'm going to refresh forex.com, so that we have the updated data. USD unemployment claims less than expected, which is good, better than expected. So we had a 216 lost jobs compared to 232. So here's the thing about that. So what we're seeing right now as a pattern is we're seeing the data come out to make the economy look strong. And then in 2 weeks to a month, the data comes back revised. So I always say this, look, this data, whether it's real or fake, it's going to affect the markets. And so we're not interested in pointing out hypocrisy. We're not interested in pointing out, this is real, this is fake. I mean, it's interesting to do that, but the reality is that hold on, I need to adjust my screen. Hold on just 1 second. In reality, what we're interested is, what does the data say and how does it affect the market? Because in the end, we're here to make profit, okay, when it comes to trading. Now, I'm not saying, I'm some kind of a profiteer and I don't care about the world. And no, that's absolutely not true. Those of you who know me know I'm definitely concerned about, doing things right. And, I have a certain level of morality that I bring to the game. But when it comes to trading, we're here to make money, folks. That's it. So, that's that. So we're more interested in how is the news going to affect the market. And I could show you right now that and we talk about this a lot. If you're not new to this, you'll know what I'm about to say. But when the news comes out to make the economy look stronger, then anything that's measured against the dollar is going to get weaker, right? Because the dollar is getting stronger. So in this case, you can see in the middle of the screen, EUR/USD. That's what we're looking at, the euro versus the dollar. This is the Forex market. This is the foreign exchange. This is the euro, which is their currency in Europe, right? So I'm going to type it out. You got EUR versus the USD, okay? So when that data came out, what happened was the data came out to make the dollar look stronger, okay? So the dollar is getting stronger. So in effect, because the dollar is on the other side of this currency pair, this gets weaker, okay? Now, you can relate this to stocks, right? So stocks are going to have the same kind of action. Gold is going to have the same kind of action because everything in trading in the US and really across the world to a degree is measured against the dollar. So you have, name a stock, ABC stock versus the dollar, right? So if the dollar is getting stronger, what is that stock doing? Same as the euro, getting weaker. Okay, that's generally how it's going to work. Now, there are some stocks and some currencies that may buck that trend. It might be that the stock or the currency or whatever asset you're looking at has its own fundamentals that are making it strong. But the general action of things is going to be what we're seeing. And of course, here you see it right here in the charts. This is a 5-minute chart that we're looking at. Okay, so each one of these candles is 5 minutes worth of price action. Okay, so that means that we are seeing whatever is measured against the dollar. 5 minutes ago, the unemployment data came out to make the dollar look stronger, right? So whatever you're measured against the dollar, in this case, the euro, has gone down. I can show you the same thing with gold. Here's a gold chart on the 5-minute. That was a pretty notable decline right there. In fact, we can talk about gold today. It's an interesting chart. That is a very strong move down. Considering the last day or so of price action, that's pretty solid. It's comparable to yesterday's. So it's it's a strong move for what it is. On a high time frame, it's probably not that big of a move, but that's notable, for unemployment, which is a weekly metric. It's not like something that people were waiting a month to see. This comes out every week on Thursday. That's a pretty strong move for just a weekly measurement. So I bet you we could probably see something with oil in that same regard. Oil's been pretty strong. It may be relatively unaffected. Let's see. Oil's pretty unaffected. No, not seeing much there. We're on a 5-minute chart. and the announcement was right here. So I mean, it moved down, but compared to the rest of the price action, oil is relatively. But here's the thing about oil. Oil is actually, the dollar's based on oil at this point. So there's, oil and oil sales are going to have a lot to do with the dollar. It's called the petrodollar. We're not going to do a whole class on that today. That's something you got to look up. You can see it here in the SP 500, which is SP 500 is a it's an index. They take a bunch of stocks and put it together, and then so it's an index of stocks. So when the stocks go down, the SP 500 goes down, and you can see that I've made some lines. We'll talk about those lines. But here on the SP 500, in the last several minutes, you can see that price has been pushed down. It's not that notable, but the SP 500 is a beast. It's a very large index, but still, even on something so big, you can see that price has been pushed down considerably and past a support. So, and for those of you who are new to the game, this support in market structure means that price had come down before, and then it moved up before, and that creates a kind of a place where price will probably do that again. And if price, for price to go through and break below that usually means it's going to take some considerable power. This is a 30-minute chart. Okay, so we're looking at much more, a bit higher of a time frame than we were before on the 5-minute. So this is a decent little, kind of structure from the day before. So yeah, that it would take some considerable, energy. Nothing too huge though, to push below that on this time frame. Now I'm going to zoom out, and we're going to review. Let's see here. We're going to review what this looks like as I zoom out on the timeframes. We're going to talk about some charting that I did from a few days ago. Actually, I did this on 14 August, so about half a month ago. My prediction was that the SP 500 would do something like this, and this was kind of just a quick drawing I did. It didn't mean that it was going to go exactly like this, but sure, so far it looks relatively accurate. It went a little higher than I thought, but now it's coming back down as I had predicted. So I could actually take this whole thing and just kind of go like that, and it wouldn't be accurate probably, but we're not going to do that. We're going to leave it where it was. So that's where it was before. And that's what I expected to happen. I expected for, as the dollar strength increases, for this to happen. And by the way, we are looking at a kind of a strange time in markets. There's not a lot of volatility outside of these kind of daily announcements that we're getting. Not daily, but several times a week, I should say. But you can see that as the dollar gets stronger, a lot of these other instruments get weaker. That's just the way of it. That's how this works. So it doesn't work 100% of the time. Let's see what happened with Bitcoin. Yeah, see Bitcoin, and then we'll move on. We'll start talking about Bitcoin because there's something to talk about here. But on this basically 15-minute chart, you'll see right here, in the last 15 minutes, price has gone down. Now, it was kind of already going down, so that's not that notable. But what is notable is the size of this candle compared to all the candles before it. It's a pretty big move down. It would be more dramatic on the 5-minute chart. So, but that's to be expected. There's not a lot of volatility in crypto right now. In fact, the entire market is kind of quiet. I've noticed, but crypto especially is super quiet. So let's see here. All right, well, let me take a look. We got some people in the private lab watching. Again, this is the beginner lab. So if you are a beginner, please feel free to ask some questions. You can ask questions in the YouTube chat if you're watching on YouTube. If you're in the private lab, you can ask questions over there. Although I do request that you come over to YouTube and ask in YouTube so people can see. People who are watching maybe after the fact. We have a few people who watch these videos later. Asking there. So, and now, while we're waiting for people to potentially have questions, I did predict this move yesterday. So this big move on Bitcoin that I'm going to draw an arrow on. Okay, we got MavBet in the private chat. Good morning. This move I predicted. right? And I think I predicted this move in yesterday's show. So this was starting, today is the 7th, so 6th, right about this time, right about where that arrow is. I used liquidity maps that we have, the Kingfisher, it's a website we use. And I said price is probably going to head down. It's going to go above my stop loss, which my stop loss is right here at the bottom. About 25,300 was where I would get out of the trade and just cut my losses and run. And I predicted the price would head back up and into profit. And it happened a lot more quickly than I thought it would. It happened at about maybe 3 hours later, 4 hours later, and it went down, grabbed, there was a bit of liquidity down here, and then it went up. And I said it would go into profit. I didn't say that it would go up from there, although I was, certainly would have been happy if it did, because I'm in a trade right now, and that trade is pretty much doing what I thought it would do. I thought it would hang out in this area and eventually pop up hard to the profit point. But this trade's still valid. It's just that we have a lot of downward pressure on Bitcoin. And so the bulls haven't really woken up yet to push price up here, but there's a lot of liquidity sitting up here at 27,200. So this is basically a live trade that you're watching right now. I'm going to roll over to the Kingfisher. I'm going to see if I can get some free credits here. Yeah, Ray on the private chat is correct if you ask me. We're in the calm before the storm. Here's a kind of what looks like a higher leverage liquidity map on Bitcoin now. Price, there's some liquidity, and I think these are higher leverage. And it's sitting at 25.8. So price may want to head up to 25.8 to grab that liquidity. And let's see on Bitcoin where 25.8 is. So that's going to be just kind of right below profit. So price will probably at some point today, let me zoom back in here. Price at some point today will probably want to head back up to this area right here where this former peak was. So, and the reason that works, okay, so look, I'm going to delete some things here. The way liquidity works is that price peaked out right here. A lot of people are short. A lot of people think Bitcoin is going to go down. And so what they're doing is they're going short. They're adding on, they're playing leveraged shorts. And when they do that, they're going to put their stop losses above a recent peak, which is like up here, right? Maybe even kind of they got in here and their stop losses are here, right? Kind of like that. A lot of people went short right here and their stop losses are above, say, like right here. So they put the stops up here, right? So if that's the case, then price is eventually going to want to make its way up there. It's going to have to find some support. There might be some liquidity below. Let's see what Kingfisher says about that. There's a little bit below, not a lot. There's a lot right here, 25.8. It's a lot sitting there. Like a lot on a short time frame, a lot on a higher leverage trade. But I'm going to look at all leverage. I'm going to spin to win, see if I can get some credits. Credits are cheap, Kingfisher. You end up paying like $1 per credit, but I think I just won about 10. 5 credits. Good. All right, nice. So here I can go ahead and go to all leverage. And there's a lot of liquidity on, I'm talking about all leverage here. So this isn't just people trading like super high leverage, 100x crazy trades. This is people of all shapes and sizes trading on this, in this case, Binance, but all the exchanges tend to have the same maps. And here at 25.9, there's a lot of liquidity at 25.9, which is where, it's above that 25.8 peak. So there's a lot of reason for price to head up. There's not a whole lot of reason for price to head down, not till like, 23.5. And that's expensive to push price down there in a low liquidity market. There's not a lot of liquidity that can be used to fuel a move down there because you need liquidity. So, and I'll explain what liquidity is in a few minutes here, but there is a lot right here. And there's a ton of liquidity sitting right at 27.2, which is why my target is 27.2 here, right at the top of my box here is 27.2. I'm expecting price to head all the way up there, right? So for the moment, the fundamental, if you will, the unemployment claim, the dollar getting strong, that's going to push price down for the moment. But at some point, price is going to find like support, and it wants to find a support right now. I can tell you just why all that gobbledygook squiggly lines that you see at the bottom of the screen, that's algo stuff. And algo stuff on the 2 hour says that it's going to find a support. Now, will it bounce up from there? I don't know. Will it stop out while I lose this trade? I could. It's possible. Price is pretty bearish right now. But the problem is there is a lot of liquidity up there, and there's not a lot of liquidity down below. And so let me explain what liquidity is, okay? So, and I've done this before, but this is a good class because look, the data on Kingfisher, with that liquidity data, that's what your big time traders have, okay? Your big time traders for every single market, your Bloomberg terminal paying $25,000 a month for this data, those type of people, they have the Kingfisher type data. But the Kingfisher data is basically free. You can spin a wheel to get the basic data, or you can pay. You can pay to get the higher level data. There's all kinds of good data on Kingfisher. It's a great, it's a great resource. I'm going to put a referral link on my channel here so that you all can use that link if you want to go actually pay for Kingfisher, because it's worth every penny, if you ask me. And they don't pay me, by the way. I don't have any relationship with them. I'm just telling you, that's how good of a tool it is. So to explain liquidity, it's like this. Here's price, right? Price is kind of chugging along. It goes up, and then it starts to head down. Now the whole market, well, let's talk about going long, because that's easier for people to conceptualize, like for beginners, right? So price is going like this, and it starts to go up, and then it comes back down, and it really wants to go up, and the whole market thinks the price wants to go up right now. Okay, so that's what the market kind of sentiment in this example says. Think the price is going to go up. Okay, so people go long. People bet on the price going up, and when they do that, what they're going to do is they're going to have a stop loss, which is where basically if the trade goes against them, then they're going to get out of the trade, right? If they start to lose money, then if price heads down too far, they're going to get out. It'll be at the bottom of this box where the blue is. And as long as you're in the blue area, you're losing money. And then let's just say they think price will go up to here, up to the top where this green box is. And so what they're planning on is for price to make its way up to the top, and then they'll get out up here at the top of the green box where they're going to make some money. However, if price goes against you, you're gonna want to get out of the trade and cut your losses. You keep going down and down and down, and you just keep losing money. That doesn't make any sense in trading, right? As a trader, I take measure moves. I will measure where I think price is going to go, and then I will measure, or if price goes too far against me, I'm going to get out. That's how I do things. So that's pretty much what trading is for the most part. You have different people who do different things, but that's the most common method of trading, certainly. So that being the case, down here where people are going to get out, that's a sell order, right? So when you buy right here, that's a buy order. And when you get to the top, you sell. Simple, right? Buy low, sell high. But when you get out at the bottom, it's also a sell order. You bought here, and now you're going to sell lower because you need to cut your losses. Now, when you sell, right, way down here where this line is, when you sell, that's going to push price down. Think about it. That's just how it is with markets. If you buy, you're pushing price up. If you sell, you're pushing price down. Well, most people are going to have their stop losses in a similar place because of the way the market works. So if a bunch of people sell right here, it's going to push the price down. Okay. Well, there are these people out there, and they're called market makers, if you will. And these are people who basically will, they're the liquidity providers. They are the people who oftentimes are running exchanges, and they have, or what they'll do is they'll kind of trade against everybody, and they'll get paid by the exchange to do it. They get a certain percentage, and they make money by essentially, and this isn't like, to say it very simply without explaining all the mechanism, they make money by pushing price towards liquidity. Okay, so if you find a liquidity node and you push price towards that liquidity node, then you will be able to make some money. And the liquidity nodes are found on Kingfisher, and the reason they're there is because of all the stop losses. Or it might be where these, the way it's measured on Kingfisher is it's where these leveraged trades liquidate. Okay, so either way, it's a sell order because the exchange is going to sell for you. Okay, so liquidation occurs when you're using leverage, and I'm not going to get into it, but I'm not going to explain that too far today, but it's going to effectively be a sell order. And it's whether you're doing it as a stop loss or the exchange does it as a liquidation to get you out of the trade. Because when you use leverage, you can't go too far against your trade. The exchange will take you out of that trade and they're going to sell you out of that position. And when price gets to a liquidation point, that's where a lot of people make money. Okay, so price will eventually be pushed there because look, when you're looking at the market, the way this works is that retail, the normal person, they're the ones that get kind of bilked. They don't, most retail loses, right? And retail looks like this. And when the big boys come into trade, it looks like that. And it looks like that. And then retail is doing this. Retail is just kind of buying back and forth because they don't have a lot of money. And the big boys come in and it looks like this. And then it looks like that. Okay? And this is retail. So if I were to take this concept and move it over to the real chart, then what that's going to look like is this. Let's delete all this other stuff. And we'll go back to here. And we'll delete all this other stuff here. Hold on. Okay. So to look at it on the real-time chart, all this like little price movement where price is just kind of ranging a bit, that's retail. Okay, that's just regular blow Joe. That's you and me. That's not those people with the $5 million accounts that are trading, $50,000 at a time or whatever the number is. That's just, but you see this big move, like I showed you. Let me jump down to a lower time frame. Give me a second. Like that big move, that liquidation move that I predicted on the show. So this big sucker right here, that's the big money coming in to push price to liquidation points. That's what that is. And a lot of times they don't have to do all this. They can just get the market to do it for them. They start the move. They start with the bigger, they push to a certain point and then the market takes over, right? So that's momentum ignition algorithms, things like that. But essentially that's when the big boys kick in. And then when the big boys are done, then you get this same kind of motion right here. Just kind of not much going on. So that's that. We are at the end of the free to the public show. So I'm going to go ahead and do the finish off here because the gorilla is not in, probably won't be until Monday. So go ahead and jump over to www.algofactory.tech. You want to find out more about what we do. You can zap that QR code, go to the website. We help people become traders. And what we do is we help them build algorithms so that they can take those algorithms and have somebody code them and have it trade for them. That is an option for traders. Most people don't do that. They'll just build an algo and trade it manually. And that can be done as well. That's the most common thing, but it can be put into basically a coded auto trader, have a trade for you. So head over there, give us an email, join us, have fun. Catch you all later.